Here we go.
Here we go. Hey, everybody, welcome to the High Ground, episode 5. We're still having a Pacific Northwest conversation. We're talking markets, retirement, behavior, and some local topics as well. Will, what do we got on the agenda today?
I don't know why, but I'm like especially excited about this one. This is number 5 for us, a whole hand's worth. I'm coming in with a little bit of energy today, maybe too much caffeine. But topics we're going to cover today is the disconnect between the economy and the stock market. We're going to talk about the $100 hot dog and ultimately how that weaves into our own behavior and our own personal finance. And we will conclude, like we always do, with local recommendations. So looking forward to it.
Let's do it. Okay, so on August 7th, Will, we had a jobs report
Hmm.
and a statement that we make. I've heard us both make this on the phone to
Yeah.
clients or committees, but sometimes you have to dig a little bit deeper to like really unpack it. Is the stock market is not the economy. And so what does that mean in this case? What that means is that we had a jobs report that was expected to have a positive outcome of adding around 80,000 jobs. And it went the other way at a loss of around 23,000. And just as we all would have expected, the market was up that day. And so here's this example of, people want this really clear line between I saw a positive or negative news report and the stock market cooperated in line with what was said. And this is where we get this line of the stock market is not the economy.
Yeah. So you're telling me prognosticators were off by 103,000 jobs and the stock market liked it. Is that all I'm hearing?
That's what you're hearing.
Okay.
And so what that led us down is we put together this chart that went back and just said, okay, like 5 years is not a long time, but at least in stock market narrative, it feels like
Yeah.
an eternity. And so what we're looking at here is this chart that shows the S&P 500 over the last 5 years. And the red dots that we're looking at for our YouTubers is we're looking at every time we had a job market miss by at least 50,000 jobs. So that's happened a little over 10 times over the past 5 years or so. And what we were looking at, Will, is like, can we correlate this to anything? And the answer comes up question mark or no or insert emoji.
Yeah.
Um,
I'm not seeing, I'm not a chartist, but I'm not seeing much of a pattern here. And like the key reasons for some of these market drops are more of like a global or national news, like whether it's tariffs last year in April or
mhm.
whether it's the war in Iran and some of the energy shocks this year, and then back in 2022, we were looking at some of the highest inflation we've ever seen. So, yeah, not seeing much of a correlation there.
And so, I mean, coming off of like, I feel like that those early ones are kind of coming off of COVID
Yeah.
times as well, where we were all just, I mean, I think everybody was trying to figure out like what the job market looked like in general.
I mean,
Um,
I was working here, but like, where was I working, right? Like, was I still at my kitchen table? Was I coming in the office under the guise of the darkness or what? But yeah,
Dress code slightly differently.
yeah,
Um,
true.
and so I think that what when we're having these conversations, it's acknowledging that okay, bad news can be good news, which is this
Mhm.
juxtaposition totally upside down. But when we're thinking of the stock market, when we're thinking about future earnings projections,
Yeah.
we can connect this back to the Fed. So ultimately, maybe this job miss can lead to, oh, okay, interest rates and maybe the Fed not hiking rates as quickly. And it also can lead, when we get these keywords, like anytime you hear the word like soft landing, like put a quarter in the jar, but that can mean hopes of a soft landing as well, where if we're just beating expectation, beating expectation, beating expectation, and then we come crashing down versus, oh, here's like a moderate miss. And if we are going to have any type of downturn in the market, it gives this opportunity for it to happen in a more soft way as opposed to a straight line down.
Mm. So true. So true. I love the point that you brought up of just like the connection of like market expectations don't normally match headlines,
Mhm.
and our brains really want it. And I think about like that behavioral finance part of our brain where it's like we want to like tie like cause and effect together really well. Like strong economy, stocks go up. Weak
Hmm.
economy, stocks go down. But unfortunately, they don't work that neatly. And here we go. But yeah, it's really interesting to see that. And so yeah, I mean, I think I myself see it the same way that you do, is from an expectation that interest rates broadly will hopefully, from a stock market standpoint, not increase, and for economic reasons, maybe a different outcome. But yeah, when I think about borrowing costs for businesses, like if interest rates stay down, they're going to have more margin, right? If investors see lower rates, well, maybe they want to go invest in that company where maybe they can get a bigger upside attached to that as well. So all good news for the market here as we hit all-time highs.
Yeah, I think the last thing kind of close with this section is like, okay, it's also interesting to see job miss in this way, but
Yeah,
unemployment not be off by that much. Like we're
yeah,
still looking at
that is nice.
holding right around 4.1, 4.2%. So I think that if those two things, if we were to get a larger unemployment miss with this job market numbers, then maybe we're having a different conversation. We this is this spider web of cause and effect variables
Yeah,
that it'll be fun to, as we reach whether it be episode 10 or 50 or 500, to keep this chart going, just for kind of our listeners' sake of like, okay, as we continue to have job market reports, can we create any not kind of common shared language about what this means for the S&P 500?
yeah. No, I love this. Maybe if I could ask you just a follow-up question, just about more broadly, like what's happening here. And I think about our listener, whether they're driving to their own office, going on a walk, or on the exercise bike, like I was this morning,
Hmm.
listening to a podcast. It's like when they think about, I think about hearing the news of job losses.
Yep.
Most people aren't tracking that on their own.
Yep.
It's like, do you think that the news helps us become better investors?
Let's, in the same way that we are differentiating the stock market is not the economy, let's think about better versus more educated being two different things. Does someone listening to our podcast every other week influence their ability to have their 401k go up? From a behavioral standpoint, maybe. From a
Yeah,
tangible standpoint, hopefully not. So
yeah,
I think it's from whether it be going on a run with a friend, meeting up for coffee, grabbing a drink. It's like I think of this stuff as just being a more educated investor and just
yeah,
having a pulse of what's going on and something that impacts all of our lives.
yeah,
If we are tracking with moment to moment news points and hoping that that's going to lead from a 10% return to a 15% return, I think that we're have a false sense of hope there. I mean, let's look to our friend Michael Burry at The Big Short, where
yeah,
if you were to go and track his tweets and say every time that he says sell, you would be in a really bad spot from an investing standpoint right now. I would
yeah,
argue that Michael Burry knows more about the stock market than you and I combined will. That
yeah,
and does that necessarily lead to better outcomes? No.
yeah.
What's your
I
take in
haven't, I
terms of how
haven't
you
seen the
do
call out for buy from Michael Burry yet, so no buys there,
it?
only sells. I personally think, I mean, I've done some research on this just about the bias of news sources being negative, and I think like it is good to be informed,
Hmm.
but it can mess with our brains and we can view the world differently and oftentimes in a negative light if we are consuming too much negative news. So, I prefer to stay informed. Some of that is like finding optimism in the middle of news headlines, which I love, like even you bringing this up here because something that we didn't expect, good outcome for the investor.
Yeah, I mean it's negative headlines sell. That's
Yeah,
tale as old as time. So yeah, I think keep our timelines healthy with some unbiased information and to your point, some optimism.
yeah, love that.
Um, okay, well let's transition a little bit. You are more of a foodie than me. Um, there, but where I mean, I feel like that you have limits within your budget. But what came across your timeline this week?
Well, let me introduce this to you. Speaking of things that I didn't expect,
Mhm.
this is a story you haven't heard, Andrew, but I had an eventful experience last night while eating a hot dog.
Okay.
So last night we were at a neighborhood pool, hanging out with some friends, talking, catching up, eating a hot dog, freshly grilled, mid-bite, living my best summer dad life.
Mhm.
Our friend's youngest son, Noah, wanders towards the pool. We hear a splash. And as we all look to the pool, Noah is now face down in the water.
Okay.
So I did what any adult would do. I sacrificed the hot dog, dropped it, ran over, jumped in the pool, fully clothed, right?
Mhm.
Grabbed Noah, got him out, big smile on his face. Like it was all fun and games for him. But thankfully he was completely okay. But within 5 seconds, I went from eating a hot dog to performing a water rescue fully clothed. And so um, that's our fun transition to the $100 hot dog.
Gosh.
So Wall Street Journal recently wrote about the rise of the extremely expensive hot dog. And as I'm looking at the Wall Street Journal article right now, one of the features of there is the caviar dog. And this is what the Wall Street Journal article says. The $100 golden glizzy, which has become a popular name for hot dogs,
Yes.
features creme fraiche, mascarpone, 30 grams of Astera caviar,
Okay.
and 24-carat edible gold flakes served on a fresh baked croissant bun. And it also involves a hot dog.
Do you
You
think
could
that
find
all of
me.
those pronunciations of high class food were correct? I feel like that
I
that's
pra I
something.
practice in the mirror. Yeah. So you could find this at the Formula One Miami. You could find this at the Miami Open, the tennis tournament.
Okay.
Um,
Not a pickles game.
not a pickles game, not a pickles game. And then like meanwhile, you've got Costco,
Hmm.
right? You've got Costco still selling a hot dog for $1.50.
Unwilling to come off of that price.
Yeah,
Finding a way.
unwilling to come off that price. So like same general food category, very, very different philosophies. And so like the golden glizzy, right? High-end presentation, premium bun, edible gold, which like if I don't know the last time you looked at nutrition facts, like how much gold are we supposed to be consuming as a part of our nutrition? That was not a part of the pyramid growing up.
Was not. I need to get a protein is in right now, so we need to get a protein count about what type, how much we're getting per serving.
And right next to the gold, right? Yeah. But yeah, it's like the golden glizzy, the caviar dog, has this high complex and like it is like people are eating it for the social media post.
Hmm.
The Costco dog has almost the opposite philosophy. No caviar, no gold, no elaborate presentation. It basically says, hey, this works, right?
Yes.
Um, I guess the question is like, at what point did $100 hot dog actually get better? And at what point did it just get more complicated, right?
Hmm.
Um, and when I think about this through the lens of like investing, right, you and I have the opportunity to review portfolios of investors all across the Pacific Northwest. And sometimes you and I look at an investment strategy and it couldn't be more complex. And that's for two people in their second decade of like investing and advising clients. And so we'll see portfolios with 30 holdings when it could have been better with five. More
Correct.
investments, more strategies, more accounts, more products, more moving pieces. And none of it automatically means better results. Um,
And I feel like, well, that there's this. You're not saying diversification is bad in this case, and I think
no.
that there can be this confusion of more equals diversification, where what's in retirement plans, ERISA actually comes out and says, what's defined as diversified? Three investment options. We're not
Yeah.
saying that that's what should happen, but it's adequate to be able to accomplish that. What you're saying is that, okay, we're going to check the box on being believers in diversification 100%.
Yeah.
However, you're talking about this unnecessary overlap, creating value by how many line items you see on a statement. and things of that nature. So that's going to be totally different in terms of what that looks like from a diversification perspective. For diversification, good. Owning 30 when five can 100% get you there, not good.
Absolutely. Absolutely. If we were talking individual companies, 30 is going to give you likely a better diversification than five.
For sure.
But like big picture, I think it's like more of a maybe a tendency or like a bias where we have this bias towards complexity where like our minds think that, or maybe we make the assumption that like a more complicated explanation must be more impactful or better than a simple one.
Hmm.
And I think the world of finance is super vulnerable to this. And so
Totally.
sometimes it takes 20 minutes to explain and it can sound sophisticated. If something takes 20 seconds to explain, it sounds basic. And that doesn't mean that the complicated one is any better, right? And so I think there's an important distinction between simplistic and simple, where simplistic means you're ignoring important complexity, where simple is going to be like what remains after you've understood all of the complexity there. So,
I'm glad that we found a way for hot dogs to get us to state unnecessary statements. This it's kind of like um there's that concept of what's the show called? Oh, like bar rescue, and you
yeah,
can do like portfolio rescue.
yeah,
But then also, I think that we can think about that through like hot dog taste tests, and like ultimately, like that's when we send you out to Miami, Will, for we can find a work function for you to go to, you can go Costco versus $100 glizzy, and
Mhm.
I mean, I think that where we're both seeing the puck going here is like, does it actually taste better?
Does it? I mean, it looks pretty good. We'll post the photo in the video. We'll post it in the show notes. The gold throws me off a little bit. The gold throws me off
Yeah,
a little bit.
that's goal. Eating goal is weird.
It
Let's
is
just
gold there. So unless it's really good for you, and I don't know, I'll ask Andrew Huberman for that one,
okay.
which is good. But yeah, I mean, I think about this in like this complexity thing as it flows through, even into like imagine a client walks into your office. You guys sit down for your predetermined meeting. They have this dream in the back of their head, and you sit down in the conversations. You say, "Yes, you can retire," right?
Hmm.
4 words, simple advice. But it's not simplistic, right? Because like under those words, like I know you're doing tax projections, you're doing
Mm.
Social Security analysis, you're doing Medicare considerations, Monte Carlo modeling, modeling like sequence of return risk,
Hmm.
estate
Hmm.
planning, portfolio analysis, cash flow, and you've got years of experience and some really high tech technology. And so the client doesn't necessarily see all of that complexity. And in fact, like I would argue like maybe like that's not for the client to see it all, but like for you as a good advisor to be able to make it really, really simple. Um, so yeah,
No,
the hot
that's
dog says, look at everything we added. Costco says
yeah.
this works, right? Just fine.
And I'd argue too, like that's such a good analogy where it's like, think of the complexity that Costco is going through to allow that to be $1.50.
Yeah,
Where it's, oh, okay, here's us thinking about our operations, here's us thinking about our suppliers, all the different things. And like there's articles I feel like annually about
yeah,
as we get some inflation print, it's like, okay, Costco's still $1.50. And they're like moving heaven and earth to be able to keep
yeah,
it that way. So yeah, that's such a powerful example of being able to say like, okay, on the financial planning side, so many similarities. And also to be able to say ultimately, gosh, is having 30 funds going to actually get you a better return? Like
yeah,
we can say full stop no.
yeah. Expertise isn't always adding more, sometimes it's removing, right?
Mm.
Um, yeah, I feel like I've watched or like going to art museums, you see these sculptures of these like massive, beautiful marble blocks that once had no form, and then like by the process of removal, it's like ultimately you get yeah, a beautiful statue. I think about David, the statue of David, and what that looks like as well. So something to be said about that too. And I'm just trying to earn earned points by talking about art on this as well. Knowing that my wife is more of an art fan than a finance fan. So this one's for you.
Shout out Portland Art Museum.
Yeah, there we go.
Um,
There we go.
cool. Okay. Um, transitioning, we know, like in thinking about, uh, $100 versus $1.50, us as Pacific Northwesterners, Oregonians, we probably have some areas of improvement as we can think about like, oh, a $5 this would do, but we want to go above and beyond in certain categories of life. So, Will, why don't you think about some of the ways that whether it be that you see people, maybe it's friends, maybe it's neighbors, maybe it's yourself, but what's your top two or three like, gosh, I'm probably closer to the caviar dog than I am to the Costco dog.
Yeah, I feel like this is like looking in the mirror, and this could be brutal, but I can laugh at it as well. I have walked out of many REI buying way too much and telling myself that this jacket is an investment when really it's just an expensive article of clothing, right? Did I need another pair of wool socks for hiking? Maybe not. If you would look at my sock collection, you would know way too many there. So I
If
think
they
like
have
I'm not
mountains
alone in
on
that.
socks, it's worth it.
Say it again.
If they have mountains on the socks, it's worth it.
Exactly, exactly. So I would say our affiliation with the REI wardrobe department or gear department is high up there for sure.
Okay.
What about for you? What do you got?
All, I think for me, I'll go two things. I definitely will, like in walking into a grocery store, when I'm thinking about like, okay, we're getting a treat for the evening.
Yeah.
My ice cream budget compared to median is way too high. We're not getting a lot of volume. We're getting like this kind of specialty, whether it be like salted cookies and cream type of flavor. So that's does it taste better? I don't know. But we're used to it and it's in there. I think the other thing that I'll say, like recently, my wife and I celebrated 14 years of marriage, and her favorite restaurant in Portland is
Yeah.
Pork No, specifically the one off of Hawthorne. And so we got extra guac, and I don't know how much it cost, but I'm sure it was more than needed.
Yeah. I feel like there's a ton of stereotypes. We're guilty of a few of those as well. But I think about the Sprinter van, right? How many
Yes.
people dream and yearn for a Sprinter van? Like, I say this like so the listeners know that our family went on a 2 week long road trip with a camper van. So like, I love them dearly. But at the
Yes.
end of the day, someone's spending $150,000 so they can sleep in a parking lot, right? And so, yeah, poking fun at my neighbors. Brandon, love you. But I mean, even if it's just a cup of coffee, like how much that have I spent on a cup of coffee, an Americano that I could like more or less make for myself at home? So there's something to be said there.
Yeah, does the Sprinter van need the ladder to go to the top? Maybe, maybe not.
Maybe, maybe.
But yeah, those I think that see one of our original blog posts, how to make a French press at home from way back
Yeah.
when. That that references the importance of being able to do that.
So true. I will say one of my and our family splurges is it is a tortilla chip. And it's not
Mm,
just any chip. And maybe this could be like my recommendation for our recommendations nearby. It's
okay.
not necessarily a location like yours, but maybe it can just be a food and I can give you a roadmap of where to get it. So the chip brand is Hot Mama's Salsa. These chips are probably twice as much as a bag of Juanitas, or not Juanitas, they're not Juanitos. Uh, but I think they're worth it. And so if you have to take out a second mortgage, that's not investment advice, to get a bag of Hot Mama's chips. Think of me when you do it. Friend of the pod. And yeah, we love them. And so we get them too much. They're too expensive, but every time I take a bite, we get it. And so my 5-year-old and I will take down a bag in an evening pretty easily.
Easy. The consistency where you know that the chip is not going to fall apart in the salsa
Yeah.
or guac or insert dip is crucial. And I
Yeah.
feel like that's how mamas get you there every time.
Yeah. It's good. It's good. So I kind of jumped ahead to my local rec. Andrew, do you have a local rec this
I
week?
do. I do. I have a local rec that I'm looking at right now that has 4.4 stars with 534 Google reviews. So maybe in my mind, this is a kind of hidden gem that obviously a lot of people know about it. I'm talking about Farmer John's Produce and Nursery. We're on Highway 18 right now, going from McMinnville to Lincoln City, Pacific City.
Okay.
And when I was in college, I would go here occasionally and get a milkshake. And 15 years ago, this was the best milkshake I've ever had. And I hadn't been there in a really long time. Went there with my oldest daughter this past weekend, and it 100% lived up to the hype.
Wow.
She went raspberry, I went peach.
Okay.
I'm a more inquisitive person at 39 than I was at 20, believe it or not. And so ask some questions about their process and how they get so much flavor out of the milkshake. And it's just they're compacting the fruit into these like ketchup size, like squeeze packets. And just it's packed with flavor. They treat you really well, reasonably priced. Um, I thought about going for the 22 ounce. I stuck with the 16. I felt great about
Okay.
that choice. But it was so good. And we're going to be back in the near future.
I love it. Is it, I mean, when you think about this milkshake, by the way, I'm a lover of fresh fruit milkshakes. Is this a destination? Am I driving to
Yeah.
go and get a milkshake? Or is this a, hey, if you're heading out to the coast, grab a milkshake on the way?
I mean, recency bias, but I would if you and your family are looking for a getaway, like they have some blow up like castles and things like
Fun.
that there too. They have, your like local honey and just fruit stand type of vibes. But it's worth the trip out there, walk through Linfield if you want to while you're around in town. But I think it's a destination milkshake.
Love it. Love it. Good recommendation. Well, I think that's our agenda for today.
Okay, we hit it.
Is this a good sesh?
Um, Really good sesh. Good job by you. And excited to jam on whatever else comes in the next couple of weeks.
2 weeks from now. Looking forward to it. Thanks everyone for tuning in. We'll
All
catch
right.
you
See you
later.
guys.